All right, imagine this. You're sitting at a cafe, scrolling through your phone, when you see yet another article about someone making millions in US real estate. You sip your coffee wondering, is this really possible, or just another get-rich-quick fantasy? Maybe you've dabbled in real estate before. Maybe you've just binge-watched a few too many episodes of Million Dollar Listing. Either way, the question lingers. How do regular people actually build wealth through US real estate? Well, my friend, today we're cutting through the noise. No gimmicks, no fluff, just real battle-tested strategies that work. Whether you're a first-time investor looking for your foothold or a seasoned pro trying to refine your game, this guide will walk you through the smartest, most effective ways to grow your portfolio, maximize cash flow, and build long-term wealth in one of the most lucrative markets in the world. So grab your notepad and get ready, because by the time we're done, you'll have a rock-solid blueprint for real estate success. Investing in US real estate, strategies that work. All right, now that we've set the stage, let's get into the real meat of the discussion. The US real estate market is like a giant chessboard. If you know the right moves, you can set yourself up for long-term success. But if you go in blind, well, let's just say you might end up buying a house with a hidden surprise in the basement. So let's break it all down, step by step. 1. Understanding the US real estate market. Before you dive in, you need to understand the terrain. The US isn't one big, uniform market. It's a collection of thousands of micro-markets, each with its own trends, risks, and opportunities. Location matters more than you think. You've probably heard the old saying, location, location, location. It's not just a cliche, it's a law in real estate. The difference between a profitable investment and a money pit often comes down to where you buy. Some key factors to look for when choosing a location. Job growth and economic stability. Look for cities with growing industries, strong job markets, and a steady influx of new residents. Places like Austin, Texas, and Raleigh, North Carolina have been booming for years due to tech and business growth. Population trends. Is the city growing, or are people moving away? A declining population usually means falling property values, not what you want. Real estate cycles. Is the market currently in a buyer's or seller's phase? Buying at the peak of a market cycle can be risky, so timing matters. Regulatory environment. Some states are very landlord-friendly, like Texas and Florida, while others, like California and New York, have stricter rent control laws. Know what you're getting into. Pro tip, don't just rely on national headlines. A city can be in a housing bubble, while a nearby town is still undervalued. Always research local market conditions. 2. Choosing the right investment strategy. There's more than one way to make money in real estate. The best strategy for you depends on your goals, risk tolerance, and how hands-on you want to be. A. Buy and hold long-term rentals. This is the classic real estate investment strategy. Buy a property, rent it out, and let the tenants cover your mortgage while the property appreciates over time. Why it works. Passive income. A well-managed rental can provide consistent cash flow, long-term appreciation. Historically, real estate value increase over time. Tax benefits. Depreciation, mortgage interest deductions, and property tax write-offs can save you money. What to watch out for. Property management. Unless you hire a property manager, you'll be dealing with tenants, repairs, and occasional headaches. Market risks. If the economy tanks or the local job market weakens, rental demand could drop. B. House hacking. Want to invest and reduce your housing costs? House hacking might be for you. This involves buying a multi-unit property, like a duplex or triplex, living in one unit and renting out the others. Why it works. Live for free or cheap. Rental income can cover most or all of your mortgage. Low upfront costs. FHA loans allow you to buy with just 3.5% down if you're living in the property. Great for beginners. You get hands-on experience as a landlord while still benefiting from owning property. What to watch out for. Tenant issues. Living next door to your tenants can be a blessing or a nightmare. Loan restrictions. To qualify for an FHA loan, you must live in the property for at least 1 year. See fix and flip. If you've ever watched Fixer Upper, or Flip or Flop, you know the drill. Buy a distressed property, renovate it, and sell it for a profit. Why it works. High profit potential. A successful flip can net you a hefty return in a short amount of time. Creative control. You get to transform a property and add value. What to watch out for. Renovation nightmares. Unexpected repairs can eat into your profit fast. Market timing. If the market shifts before you sell, you could end up losing money. D. Short-term rentals. Airbnb strategy. With the rise of platforms like Airbnb and VRBO, short-term rentals have become a lucrative option, especially in tourist-heavy cities. Why it works. Higher income potential. You can charge premium rates compared to traditional rentals. Flexibility. Use the property yourself when it's not booked. What to watch out for. Regulations. Many cities are cracking down on short-term rentals with strict laws and licensing requirements. Seasonal demand. If your city relies on tourism, you might see big income fluctuations. 3. Financing your investment. You don't need to be a millionaire to start investing in real estate. In fact, many successful investors started with creative financing strategies. Traditional loans. If you have a good credit score and stable income, a conventional mortgage is the easiest way to finance an investment property. FHA or VA loans. If you're a first-time buyer or a veteran, these low down payment loans can help you get started, especially with house hacking. Hard money loans. These short-term, high-interest loans are great for fix and flip deals, but should be used carefully. Seller financing. Sometimes the seller will finance the deal themselves, meaning you don't need a bank loan at all. Strategy. This stands for buy, rehab, rent, refinance, repeat, a method that lets you recycle the same money to buy multiple properties over time. 4. Managing your investment for maximum returns. Buying a property is just step 1. To really win in real estate, you need to manage it wisely. Screen your tenants. A bad tenant can cost you thousands in damages or lost rent. Always check credit scores, income, and rental history. Automate rent collection. Use apps like Zillow Rental Manager or Cozy to make rent collection seamless. Have an emergency fund. Repairs will happen. A leaking roof or broken AC shouldn't put you in financial trouble. Consider hiring a property manager. If you don't want to deal with tenant calls at 2 a.m., a good property manager can handle everything for 8 to 12% of the rent. Despite market fluctuations, real estate remains one of the most reliable ways to build wealth over time. It offers passive income, tax advantages, and the ability to leverage your money like few other investments can. But the key to success: educate yourself, start small, and take action. So, are you ready to jump in? The opportunities are out there. The only question is, how will you take advantage of them? And hey, worst case scenario, if you ever mess up and accidentally buy a haunted house, at least you'll have a killer Airbnb listing, right?